Good morning, everybody, and this is your DAX setups for today. So, as expected yesterday, big, strong weekly area of support, and it's basically the last line of defense. You can see there and there, a little bit above it, but this is the last line of defense. If you start getting through this, turn around and reject it, then we have a bigger play at hand. For me at the moment, the yearly bar, I don't have a yearly time frame here, but at the yearly bar, if you just think about the logic here, we've opened up here, so it's at the moment is a very small green body with a strong tail. That's a strong selling pressure. And the previous year, which opened up here and then closed here, is a big red body from there to there with a strong buying tail. So when you see that kind of price action on lower time frames, that always indicates indecision. So I think you really need to just watch very carefully as to what these bars are telling you. You need to be patient here, because I would be flipping to the higher time frames at the moment. So let's just look at some logic here. This could be a bottom. This could be a retest of this weekly level, which is 14,675. Confirmation of that would only be above this area here at 14,955. That would be a double bottom. So that's on the 8 hour. If you get to the daily, trend is also down, but you've also got some tails coming in, oscillators group to the downside. You look at it on the weekly, nothing really there except for the 150 EMA, and then my oscillators group to the downside. So there are quite a few bullish setups on those 3 time frames. Now, when you drill down to the 3 hour, you're going to smash the like button. It does help us, and you'll see that we are sideways. So, this week has been up and been down. We've tested this level once, we've tested it twice. There's your double bottom, there's the top. So also look at it as a range. That is a fairly strong range. And then I'm going to put one more level in here, because there is a range within a range. So there's your lower end of the range. Look at my oscillators here. We have price, which has formed a double bottom, and we have the oscillators moving up. That is diversions. No diversions from there, but I think it's not rock solid, so I'm not going to harp on it too much. And then if we look at this on the hourly, what does that tell you? It tells you just to pack up your charts, go lie in the sun for those of us in the southern hemisphere, and those of you in the northern hemisphere enjoy the last rays of autumn, but go lie down somewhere and just ignore this. I think that kind of the message that it's telling you. I don't really want to be trading this just to see big down, big up, big down, big up, big confusion. We are still below the moving averages, so that is still a downward trend. But as I said, that is a range within a range. And typically what happens when you see this, you get breaks below the downside here. So you would get a break below 14,675. It's a big weekly area, right? And what tends to happen is you get all the retail traders seeing the break and going, here we go, falling to the floor. I'm going to make so much money as I short the markets, and they all jump in here, and then they get ambushed, and all those stops get triggered for those that do have stops. But what it typically does is the retail traders have been burnt with all the sideways price action here already. So when it gets to this, it's like, to hell with this. I know it's going down. I'm not putting a stop in, and I'm going to ride this thing until I'm rich. And that always works out in the opposite manner. So don't assume that we are building any kind of bearish structure here on support. The bulls know that this is the last line of defense, and they are going to defend it with everything they have. And the institutions, as I've said many times, the stock market is not designed to lose money. It's designed to make money. Okay, so the institutions are going to defend this with everything that they have. And you can see that already by how the buyers keep coming in off this area here. Okay, so 15 minutes. You can see a crossover the moving average already in between the faster moving averages. Don't trust that. It's happened a couple of times, and you see there it's been sort of all over the place the last couple of days. So for me, 14,788, big break above it, come back and test it. That's my opportunity for longs. From an intraday perspective, I think you're probably just going to play around in between these two levels again. I don't really want to be buying off here because, as I just said, you probably find you'll get some kind of an ambush moving to the downside before getting triggered back to the upside. So don't really trust that at all. I'd want to see sort of 8-hour daily, weekly closes below this level before start looking at that for an area for rejection. So I'm rather of the opinion we are rather tired on the short to the short side. So 14,788 would be the line in the sand for me at the moment. However, S&P 500 is telling me to sit back and do nothing, and so is the DAX. So that's kind of my view play today. I'm not even interested in trying to second guess anything. I am going to leave this well alone until I get a higher time frame signal as to which direction we're going to go. Then we will start looking for opportunities. But for now, I suspect you're probably just going to bounce here still aimlessly. Anyway, that's kind of my view for today. Hope it helps, and we will catch up with you on Monday. Enjoy your weekends.